while the country endures its first recession since the 2008-2009 global financial crisis, and the ANC has been focused on dealing with its internal politics ahead of the much anticipated national conference in December. In the meantime, South Africa's economy continues to spiral, with prospects of improvement remaining dim. Joining us to help answer the question, will South Africa remain Africa's most developed economy, is Patrick Layden. He's the Director of Africa Practice at Herbert Smith Freehills. A very good afternoon to you, Patrick. But maybe let's start with the ANC policy. Ahead of the ANC's policy conference, we're talking about the mining charter. You know, the industry had a few concerns about the mining charter. It has finally been gazetted. What are some of the key issues that the mining sector has with this current legislation?
Sure. So thank you very much for having me on the show this evening. So on the 15th of June 2017, earlier this year, the Mining Charter 3 was gazetted. And I don't think it necessarily took everyone by surprise. We knew it was coming, but I think the content took everyone by surprise. And what happened is you saw that within 4 days of the Mining Charter being gazetted, it wiped essentially 50 billion rand off the JSE listed mining stocks. So if we look to unpack what is it that has created this concern in the industry after the charter was gazetted, and essentially it's, if you look at their three elements, there's the ownership element, there's the procurement element, and the employment equity element. And on the ownership element, what the charter has done is it has essentially distinguished between new rights and existing rights. New rights being new applications for rights which require 30% black ownership from day one, which is divided into or allocated between 8% ESOPs, 8% community trusts, and 14% investors. For new prospecting rights, you're looking at an increase to 50% plus one black ownership, and there's also a provision in the charter relating to new mining rights where mining companies must give 1% of their annual turnover to black shareholders prior to any distributions to shareholders. So you've got essentially a situation where it's not limited to profits, it's the actual turnover, and where companies are working on very narrow margins, like with your platinum producers, your deep undergrounds, the margins are very small, and so the actual 1% of turnover can be a significant amount. Probably the most contentious under the ownership issue is the existing rights, is that everyone is looking for security of tenure. They wanted protection, they wanted to give their investors, their shareholders, the comfort that their existing rights would not be affected if they had reached the 26% black ownership under the existing or the 2010 charter. Those provisions are not quite clear. There is a recognition of historic BE deals, but arguably the recognition stops as at the date of the charter was published, meaning that you post that date, you're going to have to top up, as it's called in the charter, to 30% black ownership within 1 year. So arguably it's only recognized up to a point, but it's quite a hollow recognition because after that, it's no longer recognized. So on the ownership, that is certainly one of the more contentious issues with the requirement to top up. On the employment equity and on the procurement, there have been significant increases across the board in relation to the procurement of local goods and services, and also on employment equity right from board level all the way down to junior management.
And this all happened without consultation with the industry. So it's been gazetted, but the industry is looking for ways of perhaps opposing implementation of this charter. What avenues are there for the industry?
Sure. So yes, the chamber has come out publicly, in fact, I think on the day, to say that it was not consulted. It had in fact not seen the final version of the charter, and in fact had not had any discussions with Mignet or the DMR for leading up to about, I think, a couple of months before the charter was actually published. So the Chamber said on the day that it was published, it released a statement saying it was not happy, it had not been consulted, and that it would be pursuing legal recourse against the minister. And they followed through on that. On the 26th of June, they launched an interdict application in the High Court. And what the Chamber is looking to do is to interdict the minister from implementing the Mining Charter 3 pending the outcome of judicial review proceedings. So it's said it's supposed to be in court on the 18th of July, provided all the parties file their papers in time. You know how it is with court proceedings, those dates can move. And if the chamber is successful, the minister will be interdicted from implementing the charter, which means no one will have to comply with the charter until the judicial review proceedings, which must be lodged within 60 days, is heard. So I don't foresee the judicial review proceedings being heard before the end of the year.
So all these uncertainties definitely do not bode well for a mining sector that is already starting to bleed, or that has already started to bleed jobs a long time ago. We've got Anglo Gold Ashanti talking about letting go about 8,500 people. So all of this does not bode well going forward for the sector.
No, unfortunately not. What we've got is, I think, from 2012 to 2016, the mining industry lost 70,000 jobs. And as you said, Anglo Gold Ashanti have just announced that it is looking to go through the labour relations process. And I think it all comes down to regulatory certainty. You've seen with the MPRDA amendment bill, 4 years down the line, we're still no man's land. In fact, the state legal advisors actually said that all the new amendments to the bill may not be valid, and that it might have to go back to initial stage, back to the drawing board. So there's that level of uncertainty, and that's the MPRDA, which is the heart of the mining legislation in South Africa. And then what you've got now is you've got the charter that's come out where the provisions are not clear. People are uncertain. The litigation is actually going to delay and we might be in court for years. So there is this uncertainty, there is this delay, and investors don't like uncertainty, unfortunately. They really don't.
Not like uncertainty at all. That was Patrick Layden. He's the Director of Africa Practice at Herbert Smith Freehills.